So we are back again live now. So yesterday, as we talked about, that was supply and demand. So we are going to complete our supply today. Then we go to the order blocks, as I was requested yesterday by someone that I teach today the order blocks. So I'm here to teach you guys today again order blocks. So kindly subscribe. Let's chat. Ask me questions where possible. I'm going to be answering you all that. So just ask any question that you feel like about trading or vlogging or anything. So I'm going to be able to answer you. So without wasting time, we should just go to the chat. So the first thing that you should know is what an order block is and the areas that you need to use them in, how to use those order blocks. So that is all we are going to talk about today. So the first thing that you should know, let me first bring the charts on. Let me bring the charts on. Chats. Guys, kindly subscribe if you haven't subscribed. Subscribe, share the live, let others join us and we learn. Share with your friends so that we learn. As a Forex trader, you have to be patient. Patience pays. It pains but pays. So I'm first looking for something here on the chat, so then we shall begin from there. For now, let me look for something here. Just kindly double tap the screen to like the live, then share with your friends also. So let us first finish the supply and then we shall begin with the order blocks. Let's first finalize with the supply that we began yesterday, so that we go to order blocks and we finish also. Then tomorrow we do other things or we learn another thing. As I said yesterday, supply is an area where there's a push or a big momentum to the downside. What I mean is that, let's say the market was trending up, that the market was bullish. It was the guys were buying, everyone was buying. Then it reaches a point that it drops down. So that big move that is made, or that big push, that is what we term as a supply, or the supply zones in the market. So this is it. We are finalizing with the supply that we began yesterday. Then we go to order blocks. We learn order blocks. So this can be termed as your supply, this. So it's also the resistance. This is your supply right now. Because you see this big move here to the upside. So this is what the supply is. Then we can be able to spot them here on the charts. So this is your supply. This fair value gap here, this is your supply zone. So in the how to trade now, how to trade all this supply, just wait for the trend. That is, if it is trending up, then it reaches a point and it breaks the structure. So you wait for it to tap on the supply zone and then sell from there again. So that is how we trade supply. That is how we trade supply. So I'm going to spot another supply zone. This is another supply zone right here. This is a supply zone. This one here cannot be a supply zone, as you see all this. This cannot be. It should contain at least 3 candlesticks. And that is what we shall learn in the order blocks today also. So if there is anything that you guys want to learn, so we can talk about it in the next stream. For now, we are learning order blocks and the supply. Let's see another pair. So this is a supply zone also. Supply zone right here. As you see that the trend tapped again. This is a supply zone because of this momentum or the drop. So as you see that the trend went back up and tapped into the supply zone, and now we sold again. As you see, it's respecting all these zones, so it's your supply, which is strong because it's not tapping even yet again. As you see all this happening. See, it came here, it rejected. As you see this week, this is a week, this is called a week. It's a rejection that is formed by a candlestick. Let me write it somewhere. Let's say. So a wick is a rejection that is formed by your candlestick on the charts. That is what a wick is. Let me see. With candlestick rejection. So I want to first write it down for you guys. So a wick is simply a wick long tip formed after a candlestick rejection. So this is what I mean by it. This is the definition. A wick is a wick long tip formed after a candlestick rejection. So this is what it is. And here we can be able to spot most of them. Very many that we can be able to spot. All this. This is a wick, this is a wick, this is a wick, this. So there are very many, even this also that tapped here. This is a wick, of which this can be our liquidity also. So for now, let's begin with our today's topic. Our today's topic. So in today's topic, we are going to talk about the order blocks that I was requested to do. Let's talk about the order blocks. So simply, an order block is the last candlestick from the opposite direction. Last candlestick, let me write it down for you guys. order blocks, order blocks, order blocks. I'm going to give you guys two definitions that you can be able to remember, or you just read and you do it straight. So I'm just going to be able to give you the definitions. So an order block is the last candle from the opposite, can be from the bullish side or from the bearish side. So an order block can be from the either side, either from the bulls or from the bears, from the opposite direction. That is what we term as an order block. Yes. So an order block is, or it's a 3 candlestick formation. An order block is a 3 candlestick formation. So let us write here. An order block is a 3, or it's the last candlestick from the opposite it is also a 3. It is also a 3 candlestick formation. So this is what an order block is. As simple as this. So an order block, or order blocks is the, so this is the an order block is the last candlestick from the opposite direction. This is what I mean by it. Let us illustrate. This is your trend. Then for context, let me write for context. An order block should have a fair value gap, and a liquidity sweep. This is for context. For you to spot a valid order block, it should have a fair value gap and liquidity. For this also, you can also, for the fair value gap, others call it imbalance. So let me say stroke imbalance. So an order block is the last candlestick from the opposite direction. For context, it should have a fair value gap and imbalance and liquidity sweep. This, for you to find that, or for you to know that it's valid, it should have all this. If it doesn't have a fair value gap, it is not valid, it's invalid, because we have two types of order blocks. That is the bullish order block and the bearish order block. For the bullish, it's where we buy from. For the bearish, it's where we sell from. So these are the two that we have. So your order block can also have a break of structure. Let me show you here the break of structure. This is your order block should have a break of structure, fair value gap, and liquidity sweep for it to be valid. If it is not having any of those, then it's invalid. So it should be invalid. So I'm going to show you here where the liquidity sweep comes in. For it to be valid, it should have this. So this is our sweep of the liquidity, of which it took it out from here. Let me extend it down so that you guys see well. So this is the sweep of our liquidity, this. And this is our break of structure, or BOS, this. So that is the break of structure. For you to know that it's valid, it should have this. Then this is our fair value gap. If you don't see this, then you just look for the last candlestick and mark it out. So now I'm going to show you in the live charts. I'm going to show you in the live charts here how to spot them, how to spot the invalid and valid order blocks. For you to be sure that it's valid, it should have a fair value gap, liquidity sweep, and a break of structure. Break of structure is BOS that you will see on some charts. It should also have a break of structure, of which you will see the change in the character or the change in the market structure. So now let's go to the live charts and show you. So we are going to mark them out. This, so is this an order block to you? If you see, is it an order block or it's not? Let me see in the charts. Double tap the screen, guys, to like the live. Double tap to like the live. So is this an order block or it's not? This, the one I have marked out. And is this an order block also? This, is it an order block? So this is not, this is. Even this also, it's invalid, but it's an order block and invalid. As you see, if you are to mark it out, we have said it's the last candlestick. So which one here is the last? The last is this bullish candlestick here is the last from the upside, which is a bearish candlestick, this. So this is invalid. You will not see, you don't see here the break of structure, and you don't see the liquidity sweep, so it's invalid. So for you to know that the order block is valid, it should have three straight candlesticks. Let's say the market was trending up, so it should have three bullish candlesticks for you to know that the order block is that the order block is valid. So this is an order block. This is a bullish order block. As you see, this is the last bearish candle before these three, which is this one bull, then this, and the third one. So this is a valid order block. So you just mark it out from here. You mark the high and the low. That is how you will map it. So you just tap from this is the high of our last candlestick. Then you mark it out. And I'm going to show you what is happening here. So this is a valid one. This is a valid order block. You just begin from the high to the low, you mark them out. You mark them out from the low to the high. The first one that you mark out is the high of that candlestick and the low of it. Then you should know 3 candlesticks. If not, then it's invalid. If it is, then it is valid. As this is a valid one. This is a valid one. Let me show you. So this is valid. As you see, these 3 candlesticks here following each other. This is what I mean, that it should be followed by 3 candlesticks. This is the last one, which is a bearish candlestick. So it's the last followed by these 3. So if you had bought from here, you could have gone out from here. Then as you see, it tapped again. So this is the sweep of the liquidity that I was saying that it should have. This is the sweep. This is the sweep of our liquidity. As you see, it tapped into the order block. So now we are looking for buys. And what are you targeting? You are targeting this zone here. So our target is this. If you have taken here a buy, because if you just see, if you spot this, then you wait for the liquidity to be taken out, which is taken out here. Why am I saying this is liquidity? Because this is our last low before this taking out here. So as you see, it tapped here. Now we are going back. So this is your first target. This is your first target if you had entered position. So this is going to be your first TP. Then your last TP is going to be up here. So this is going to be your last TP. And this is how we trade order blocks. So this is a bullish order block. It's not a bearish one. So we shall go and I'll show you also the bearish candlesticks or the bearish order block from the last candlestick from the opposite direction. So this is what it is. Liquidity sweep, which is here. Let me write. Liquidity. So that is your liquidity sweep. Meaning this order block is valid. It's not invalid, it's valid. Now after seeing the liquidity being swept, then you just wait for it to tap into the order block, of which it's this. Then for it to tap on it and you enter for buys. Let's say you entered in this third candlestick, which is very strong with the momentum. As you see, it closed above this. It closed above the second candlesticks or the previous ones. So for you to enter here, you should have waited for it to close above, of which it closed, and see here it opened from this. It opened from the low of the previous one. So if you had entered here for buys, then you should just target this. As you see the market, how it is moving, the market is moving to the upside. So this is your first take profit. Then you add here after making this. So this can be your zone. After it coming here, let's say it comes here and retests, then you add more entries here, targeting the second take profit. And that is how people make take profits. So this is it for the bullish one. Now I'm going to show you for the bearish one. This is a bullish order block. Bullish order block. So this is our bullish order block. So now we are going to the bearish one. So let me see in the chat if you guys haven't understood anything. Let me see in the chats. Then you can be free also to ask any questions where you don't understand. I'm going to be able to repeat. So just ask your questions. I'm going to be able to repeat it for you guys to understand. As I said, this is the last bearish candlestick. And when it's the last, you just wait for it to be followed by the three, of which the three candlesticks are here. These three bullish candlesticks following each other. So this is a valid one because of these three and the last candlesticks. Then here is our liquidity sweep. So this is what makes it valid. Now let's look for another one. Let's look for another one. Here is one right here. So this is your order block. This from here. As you see, this is the last one. So this is our bearish what? This is the bearish order block now. This was our bullish one, and now we are going for the bearish one, and I'll show you. So this is the last candlesticks followed by these three. So as you see, are you seeing these bearish candlesticks here following each other? So this makes it our order block. You just mark it out from the high. This is how we mark it out. Begin from the high and then mark out the low. So like this, just. And this was the sweep. This was the liquidity sweep here, of which you see this candlestick. Are you guys seeing this last bearish candlestick or the second one? This second one. So it swept this liquidity here, as you see. It broke it to the upside and now it dropped. The market dropped down. So this is a valid one also. And this is our fair value gap also. This one right here is a fair value gap or the imbalance. So what we shall wait for here, what we do, you wait for it to come and tap here again. Then it's where you sell from. The bearish order block can also be termed as a supply zone. That is a supply zone also. Then for the bullish order block, it can be termed as a support or demand zone. So they are just the same. If you know how to trade demand, then you can be able to trade order blocks. If you can be able to trade order blocks, then you can trade demand and supply, even support and resistance. So it's just like that. It's just like that. So anything that you guys want to learn, let me know in the chat. Or you can be able to reach me out via those links on the description also. You can be able to reach out, then I'll be able to help you. So guys, you can be able to ask any question that you feel like. So I'm going to be able to answer you. Ask me any question about trading or inquiries where you don't understand. I'm going to answer you, or repeat also. I can repeat for you guys to understand. Now let me look also for other examples of the order blocks, both bearish and the bullish one. So I'm going to show you an example of invalid one. So this is an order block also. This, it can be an order block, but you see here it's not followed by 3 candlesticks. So this is your first one, this is the first, second, but the third one is not here, of which this is going to act as the liquidity sweep right here. Now it's an example of an invalid order block. So this is your last candlestick and it's an order block, so you just mark it out from the high to the low. So double tap the screen to like the live. So as I have showed you guys the invalid one, then now let's look for another valid order block. Yeah, right here. So it's right here that I'm going to show you. So I'm going to show you an example of a bullish order block also here in this. Let me show you. So as you see this, which one is the last candlestick here? The last candlestick before the 3 moves. Which one is it here? So it's this one here, the bearish one. So this is it. This is your order block. So how you mark it out is from the high to the low. You have to map it out well from the high to the low of it. As you see, this is a 3 candlestick move from this first one, second, and then the third one. So this is it. Let's mark it out. As I said, from the high, you begin from the high of it and then to the low, marking it out like this. And the second candlestick closed above the previous one, so it's valid. As you see this then happening, so the second bullish candle closed above the previous one. This is the previous one. It's what we mean, like the previous high, the previous low. So the previous means it came first before this, of which the second one closed above it. So this is the close of it, and these are the rejections as I said it earlier. So if you weren't here earlier, I said this is a week. These are weeks. They are long rejections created by a bullish or a high momentum. As you see, this is a momentum going down. So this is what I mean by the wicks. The wicks are this weak point or the tips of the candlesticks. This. So those are wicks. Now let's check on other pair. So this is gold. let's check for the order blocks. This cannot be your order block. This it cannot be. But once if you are trading fair value gaps, then this can be your order block also, or your fair value gap. If you are trading, so this is your fair value gap. And how do you trade fair value gaps? You just wait for the order to be filled. As you see, this gap here has been filled by this. This is how to trade fair value gaps, FVG. You just wait for the gap to be filled. So it's a bullish one. As you see, it came back and tapped into the fair value gap, which is filling. This is what we mean by filling. Then this is your liquidity also. This is your low, is your last low. So this is obviously it. To trade fair value gaps also, you need liquidity. Anything that you trade, you need liquidity. Liquidity has to be there, as it helps us in finding directions. So in all this, in all the order blocks, you should know the market direction, or the trend, the market trend, or the end of the market. Where is it going to end and when is it going to start again? As you see, this trend is not ending. And why is it not ending? So how to know now? You have to analyze from the higher time frame. That is where you know that the trend is going to end. That is how you know that the trend is going to end or it's going to start again. So that is how you obviously know when the trend is going to end. So for you to trade order blocks, you should know the market direction or the directional bias of the market. So in this, do you think the market is going to tap back again? This is our zone right here. And this can be our order block. But are you sure it's going to come back? This can act as our order block. And why? Because of this. This can be our order block because of this. This is the last bearish candle. As I said, the last bearish candle before 3 candlesticks move. This is the first, second, and then the third, of which the second one closed above this. So this is our break of structure. Let me just mark it out. So from the high to the low, from the high to the low. So this is our fair value gap here, or it's the order block. Our fair value gap can be this. So this is your order block right here, of which you will wait for one thing to happen again. That is liquidity to be swept. And when is it going to happen? It's going to happen around here. So this can be the sweep of the liquidity. Then this is our break of structure, which is B or S, or the boss. So guys, this is simply how you trade or spot the order block areas or the zones. So this is the bullish order block. Guys, double tap the screen to like the live and subscribe also if you haven't. Order block. Subscribe if you haven't, guys. So this is the liquidity sweep. So I'm marking them out. This is your bullish order block. This, it's your order block. And why? Because of this. As you see this, so it's why we are terming it as an order block. I think you guys are seeing this. You just mark it out from the high and then from the low. Why am I saying it's an order block? It's because of these 3 candlesticks that are following each other. This is your last bearish candlestick before this bullish move. So it's why we are saying it like that. So this is your break of structure. So Sylvester, hi, welcome to the live. Pause. So let me know, guys, what next do you want to learn tomorrow in tomorrow's live? What should I teach tomorrow? Let me know in the comment section. So this is your liquidity. So I'm marking them out for you guys to see very well. This is your liquidity, of which you will wait for it to tap on it. So this is the break of structure. This is your bullish order block, of which it's this. Mark it out from the high to the low. And why is it that? It's because of these three candlesticks move here. This is the first, second, and third, of which this is going to be our liquidity. So you just wait for this market here, which is 1 hour time frame, as you see. 1 hour time frame. So you just wait for it to come back. Of which it will sweep it from here. Then you can wait for your confirmation here for it to close above the liquidity zone. So it's where you will buy from. You will not buy here straight. You never know, it can break this order block here, or it can make it invalid. And why do I say it can make it invalid? It can also break this and then it does this and it drops. So that is why I'm saying that. So you just wait for this move here to happen. And you know the market doesn't move in one direction, so it plays around. So for it will play around and then it sweeps this. What I mean by the sweep is it's going to form this. Then you can buy from here, add more entries to the upside. Then this is going to be your target. So this is simply how you trade order blocks, both the bearish and the bullish ones. So your liquidity is going to be swept from here, from this. As you see, it took out this line here. In simple terms, this line is the liquidity. So it will take it out, and then you wait for your confirmations here above the sweep, and then you buy. So that is simply how it is. It's not hard, guys. It's not hard. So kindly like the live, double tap the screen and share also. Then let me know what next do you guys want to learn in tomorrow's live. Tomorrow we are coming live again, and what do you guys want to learn? Let me know. If nothing, then we can end it from here. So did you guys learn something? Banti Kumar, hello. Welcome to the live. So what next do you guys want to learn? Let me know. Banti Kumar, welcome. Welcome to the live. So this was all about today's lesson. Tomorrow we shall meet again. But what are we going to learn next? Let me know. Which one do you guys want to learn? What do you want to learn? What do you guys want to learn? No, it's not below. It's not below. It's not below. So if it is below, then that is going to be invalid order block. If it's below, it's going to be invalid rather. So Banti Kumar is asking me, who are you? So I'm Ajame, simply as trader. I trade synthetics and Forex plus crypto also. I have been trading since 2021 and I taught myself. So that is who I am. I taught myself. He is saying, where are you from? So I'm from East Africa. Oh, thank you, man. Thank you. Thank you. If I'm your first teacher. So let me know what do you want to learn tomorrow and I'll teach you. What do you want to learn tomorrow? Oh, thank you, Godwin. Thank you. So it's better that you have learned something new today from me. That the liquidity sweep is not below the order block. Yes. It's nice that you have learned something today from me. That it's not below the order block. So the order block is above the liquidity sweep. It's below the liquidity sweep. It's not above it, as you see here. For it to be valid, it should have break of structure, which is this. For your order block to be valid, it should have break of structure, liquidity sweep, or fair value gap. What do I mean by fair value gap? Let me show you. So this is your fair value gap, which can also be denoted as FVG. This. So guys, we shall meet again tomorrow. I want to end it from here. So if you have more questions, let me know. Just drop them, I answer, then I go off. Drop them, I'll answer, then I go off. You're welcome, Godwin Obame. So do you guys want some signals for synthetics? Those are derivative. Do you guys want some signals so that I give you if you trade them? If you trade them, that is derivative trading view. So this is what I mean by the synthetics. So as the market is closing today night, you can also trade this in weekends. So the market of synthetics can't close, it's just there 24/7. So I trade all this. So guys, let me see you tomorrow in the next live. Kindly subscribe if you haven't, like the video, share the channel. So and let's meet tomorrow. God willingly, we meet tomorrow. So just subscribe to stay tuned to the channel so that you learn something new every day. Because every day is a learning day. You learn something new every day in your life. So see you in the next video.